Cornerman. I'm the Chuck in the Markets Up Chuck, and today it's my pleasure to present Medco, a healthy choice for your current portfolios in a very tough economic time. And I chose this company because, as I say in my blog, I consider it to be a rare gem. It's a company that's actually extremely well positioned for the marketplace today. I want you to notice that this company was recently spun off by Merck & Company in 2003, and since that time you can see that its earnings growth has been very excellent. It's averaged over 22.4% growth, and the stock has consistently increased earnings year after year, including through the calendar year 2008, and it's expected to continue to show growth in 2009. The company's stock price, as you can see, has clearly correlated to its earnings growth. It was actually, because of the quality of this company, its recession-resistant nature, was very highly valued, even as recently as 12/31/07. The current market did have some effect on Medco, but less than most companies. The stock price now has come into what we believe to be an extremely, attractive entry point. At 18.9 times earnings, you can buy this company that is very well positioned for future growth at a very attractive entry price. When you compare Medco's record to the general market after being spun off from Merck, which is just, really the past 7 years or since August 29th of 03, through June 26th of 2009, as I'm reporting here, $100,000 in Medco would have grown to $342,638. That's a 23.5% return versus the S&P 500, which would have taken $100,000 and actually saw it shrink to $90,000, or a minus 1.6% compounded annual return. And clearly this has been a superior investment. When you look at it from the standpoint of going forward, and this is based significant. This is actually the midpoint of company guidance, which is reported by the consensus of leading analysts from First Call that follow the company. They're expecting the company to continue to grow at between 15 and 20% a year for the foreseeable future, and we believe that that's also a very attractive growth rate. Also, as you can see, if that occurs, if Medco was to trade, was to grow at 18%, which is the midpoint of that 15 to 20, and trade at its growth rate price earnings ratio, that represents about a 17% rate of return from here, from a company that has very, very attractive future prospects. Medco does have about 40% debt on its balance sheet. As you can see here, they're a very, very strong free cash flow generator. So, I don't believe the debt is really a problem. Their cash flow per share, operating cash flow per share, was over $4 a share, and they bring a lot of that right to the bottom line. So the company's, extremely high quality with, great fundamentals and a great balance sheet. As again I mentioned, I think this company is extremely well positioned for the future. Give you a little bit of background on the company. I've gone to their website and looked at a company snapshot here. As you can see, they're a leading healthcare company serving the needs of more than 60 million people. They're the world's most, by their own admission, they're the world's most advanced pharmacy. They provide clinically driven pharmacy services designed to improve the quality of care and lower the total cost of health care for private and public employers, health plans, labor unions, and government agencies of all sizes, and for individuals served by Medicare Part D prescription drug plans. Essentially, Medco Health Solutions is a pharmacy benefit management company that is actually part of the healthcare cost solution rather than the problem. They very profitably dispense generic drugs, which is a very important part of their business. They have a very strong mail order business. They also have, again, a strong position, as this page on their website points out, in Medicare. And when you really look at all the current health care reform proposals being proposed by the current administration, they turn out to be very strong pluses for Medco, and that's one reason why I think it's such a interesting opportunity today. The company is not only politically well positioned, it's also demographically well positioned as the world's population continues to age, and then in addition to that, the economy has also been very economically resistant. In fact, the worse the economy has gotten, the more benefit that Medco's offered to its customers by being able to provide them less expensive health care costs. So, as I always encourage all of you, this is just an introduction in Medco. This is a company that I think is worthy of further research and scrutiny by you. I think, it is a company that is, a great long-term investment from here. I'm really offering this as a long-term investment. I believe over time, over the next, 3-5 years or more, this company will continue to grow earnings, but I do encourage you to do your own work. There's a lot of information available on this great company. We do believe it has tremendous growth, and this recent weakness in the general market, even though it hasn't hurt Medco that much, as you can see the price above this line here, the price was was somewhat pricey, as I mentioned earlier, in 2008. It's currently very, very well priced for, considering all the possibilities and benefits that this company offers investors going forward. This is Chuck Carlin. This is one I think you ought to take a look at. I hope you enjoyed today's presentation. I look forward to talking to you again tomorrow. Thanks for listening.